what do you think about the idea that we might see some more reshoring of the energy business? At least now the administration is pushing back on that idea. Do you think that that will win the day, or do you think that eventually they're going to relent and we're going to see more production coming out of the U.S. or politically safer or more stable places? You could throw Canada in there. You could throw Norway in there, or the North Sea as well too. They're politically a lot more stable than trying to rely on, say, Venezuela, Iran, and Saudi Arabia to replace Russian oil.
It's not like the oil in Venezuela and Iran is going unconsumed right now. I mean, that's, it's going unconsumed at market prices, but it's not going unconsumed. Some of the Iranian oil is being stacked on tankers because the Iranians think they'll get a better price down the road, not because they can't sell it. So some of the interest in going back into Venezuela, where Shell could ramp up its former production relatively quickly, or into Iran, where there's 80 million barrels of oil floating right now that could be tapped much more quickly than Iranian production could be tapped. Those are like the SPR, right? We've tapped the SPR for 50 million barrels twice now, and Europe says they'll tap their SPR for 50 million barrels. So, I mean, these are very short-term impacts. Much more interesting is why fracking hasn't picked back up in the United States. It costs about $45 per barrel to frack a well in the United States. Oil's well over that. Then you can sell it forward at 75 out the curve for years. Why aren't they increasing? Well, the argument is, investments in energy are long-term. Not fracking. I mean, fracking is more like mining. I mean, you get most of your money out in 6 months. And, there's a tail and it takes about 3 years, but those wells are not very effective after that. And I think the reality is that, they fracked out the Bakken, and they may well have fracked out the better part of the Permian and the Eagle Ford at this point, and that it's going to take higher prices to attract them back in, and it's going to take a better regulatory environment because nobody wants to be caught with a large inventory of whatever, and the government comes along and says, that you can't sell that or you can't deliver that. We still have massive problems with energy in the United States. We've cut off Russia. Russia exports about 700,000 barrels a day to the United States. About half of that goes to the West Coast, coming out of Siberia. And that's because we don't have pipelines that run to the western part of the United States to deliver Texas, Oklahoma type oil. We don't even have pipelines that deliver the stuff down from Alaska for the most part. A lot of that still comes by ship. So, that's where the energy impact is going to be the biggest, is on the West Coast of the United States. And then in Europe, where 40% of the EU's energy use is from Russia, which means 100% of Finland, 90% of Sweden, 80% in Germany, not nearly as much in France, where they've got nukes, or Spain or the UK, where they, so it's not even at all. And that's why Germany is the linchpin to the whole Ukraine discussion, and how fast they can get off of Russian gas and oil when they've shut down their own nukes, or at least were supposed to this year, and when they're backing off of coal, which is, they have vast potential for domestic production. So this is where we are, is green against climate change, against near-term energy issues. And we are not willing yet to give up the green policies to adjust the energy policies.
The old Lenin line that there's been decades where weeks happen and there's weeks where decades happen. And it seems like we have seen Putin did something that no one's been able to do in the post-World War II period. He's united Europe. He has resulted in profound changes from Germany with defense spending, going to 2% of GDP, and a rethink about green energy, at least initially. We're only a couple of weeks into this right now. Even little things like there's now a big argument among ESG investors, environmental, social, and governance investors, whether or not military weapons manufacturers can be now included as part of ESG. Boy, 2 weeks ago, if you would have brought that up, you would have been laughed out of the room. And now it's all of a sudden a serious question. Do you see all of these movements as having legs, meaning they're going to stick around? or do they kind of peter out in 6 months or a year, and then we go back to the whole green movement one more time?
And so, a huge part of that depends on whether you believe Putin is in charge of Russia and or the guy who replaces Putin is like Putin. Because if you're Germany, you've got a huge problem that you need to resolve. And the idea that you are going to look to the East for your future is no longer nearly as appetizing as it was before. Germany and its look to the East has always been part of the friction about a united Europe. And now it's Germany that's got the biggest problem, not the Med countries, not France, not the UK, and they're going to issue Euro bonds. So, I mean, it's, every march starts with a single step, and they seem to be moving, as you said, because Russia has once again made itself an enemy that they can unify against. So the really, really big question globally, and one that I'm spending a huge amount of time on because I'm a China expert. I spend a lot of time in China, or did before 2 years ago. Is there going to be a new Cold War? Are there going to be two blocks? And the sad reality is that China plus Russia is very much like the United States plus Canada, and you can throw in Mexico. You can throw in Iran on the other side, where basically those blocks are commodity independent. They don't need food. They don't need energy. Now, China does need food and it does need energy, but Russia's got plenty, very much like the United States and Canada again. And, so those blocks could live independently. We've done that before. When we did it before, the West was about $13 trillion and the Soviet Union plus China was about $3. Now the West is about $45 trillion and China plus Russia is about 20. So, I mean, the scale has changed. And back prior, Russia was 90% of the China-Russia bloc, and now it's the other way around. Why does that matter? Well, supply chains are what determine things. And it's a lot harder to attack Chinese supply chains, given that it's continental in scale and nowhere near Europe or the United States, and that it has access to Southeast Asia. It's going to be much more difficult to limit their spread as they spend dollars out of a $20 trillion economy with an $800 billion trade surplus, which gives them the wherewithal to buy good feelings around the world. It's going to be very difficult. So, Americans say, well, they have to export to us. Well, that's what we're saying about Russia. They have to export energy. I hope so, because if they don't, if they can decouple, you'll definitely see much more of a movement towards these two separate blocks. And to me, that's the exact opposite of from Reagan till COVID, when you were opening the world. I'm used to be the chairman of the Global Interdependence Center. I'm real big on trade interdependence. It was deflationary. It was productivity enhancing. It brought billions of people into the world economy. And if you go the other way, it's inflationary. It's risky. It risks war between big people, and it reduces productivity. Just not good.
Yeah, and that, when you talk about, the big question is whether or not Russia will be importing energy. Let me, go back to McVean's wheelhouse, and let's talk about commodities, and let's talk about grains, and maybe even a little bit of livestock as well too. And let me ask the question provocatively, an open-ended question to you: Are we going to have a famine, a global famine this year in 2022 because of what's been happening in the Ukraine and Russia?
It's possible. I mean, roughly 25% of the wheat and 1/6 of the corn comes out of Ukraine and Russia combined. Now, most of that goes into Turkey, Iran, Egypt, big consuming economies close by. It moves out of the Black Sea. The Black Sea is closed right now. Whether it gets back to operating again matters. It's way, way harder to move that stuff by rail or by truck or some other way to get it out of there? Will it be allowed to move out to avoid humanitarian disasters in those countries in the same way that they're still paying for gas out of Russia for Europe? Ultimately, price will move these grains around so that, if China buys what Russia is producing, then what China is consuming now becomes available to somebody else. But those are less efficient allocations. Otherwise, that's the way to be allocated now, right? So the price will be higher. And that will be a burden to low-income countries where food, and especially non-meat food, grain-based food, is way more important. Can this production be made up? Most acres are in production most places. For instance, in the United States, we have acres that are in what is called CRP. Those acres are the worst swamplands and wetlands. You put them in there and you get paid by the government, but you couldn't really grow very much on that stuff. So the real issue is ethanol, which consumes huge quantities. Roughly 1/3 of the corn produced in the United States goes into ethanol. So here you have food holding down energy costs. So at what point is food so scarce that you'll give up energy to produce food again? That's really the main place that you can get a lot of feed back on the market, of food back on the market quickly.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.